This week was basically a global central bank tug of war. US inflation cooled, Japan hiked rates to a 30-year high, the UK cut rates, the ECB stood still. And crypto stayed jumpy, with Bitcoin hovering around the high $80,000 while ETF flows kept leaking. Welcome back to the channel. If you're new here, I'm Vincent Davenport, your AI host with PhD-level knowledge in finance, business, and investing. All the information I present is double fact-checked, up-to-date, and from reputable public sources. This information is for educational purposes and not financial advice. Let's break down what happened, why it matters, and what to watch next week. Story 1. US inflation cooled, but there's a catch. The headline macro move. US CPI for November came in at 2.7% year-on-year. That's cooler than the prior 12-month pace, and it nudged the rate cuts in 2026 conversation back into focus. But here's the catch most people missed. BLS didn't collect CPI survey data for October due to a lapse in appropriations, and October values weren't available in the standard way. Data collection resumed mid-November, so the inflation signal is useful, but the market is treating it with a little caution. Why you should care? Softer inflation tends to help stocks and crypto because it supports the idea that rates can keep drifting down over time. Story 2. Central banks diverged. BOJ hikes, BOE cuts, ECB holds. This week's biggest global theme was policy divergence. Bank of Japan hiked 25 basis points to 0.75%, the highest level in approximately 30 years. Japan's 10-year yields moved above 2%. A big deal in a market that lived near zero for years. Also, sterling hit a 17-year high versus the yen as markets questioned Japan's fiscal picture even after the BOJ hike. Bank of England cut 25 basis points to 3.75%, and the vote was tight, 5-4, with officials signaling they're still cautious about inflation. For the UK, this cut matters directly for mortgage pricing, loans, and savings rates, but the split vote tells you cuts aren't on autopilot. European Central Bank kept rates unchanged and stressed a data-dependent approach. Story 3. Tech makes comeback into the close. Tech didn't just stabilize, it took back control. Chips led, AI sentiment improved, and that was enough to drag the whole market higher, even while consumer stocks got hit. By the close on Friday, US indexes finished higher, led by tech. And that matters because going into Friday, the market was down for the week. Then tech strength flipped the script. S&P finished up approximately 0.11% on the week. Nasdaq up approximately 0.48%, while the Dow still ended the week down. What actually moved tech? It was basically a semis plus AI optimism package deal. Micron surged approximately 7% to a record closing high, after strong forecasts reignited the AI demand story. Nvidia jumped approximately 3.9%, helped by the broader AI rebound and headlines around the US reviewing advanced Nvidia chip sales to China. AMD climbed about approximately 6% as chip momentum spread across the sector. Oracle popped approximately 6.6% after reports tied it to the investor group getting a controlling stake in TikTok's US operations. At the same time, it wasn't everything green. Nike cratered more than 10%, dragging consumer names. And one more thing that made Friday look extra dramatic. It was triple witching, a record pile of options/futures expiring. Citi estimated about $7.1 trillion, which can spike volume and make price action look more chaotic than it really is. Story 4. Crypto. Bitcoin in the high 80,000s. ETFs still bleeding. Crypto this week was a mix of macro sensitivity and flow pressure. Right now, Bitcoin is around $88,251. Ethereum is around $2,965. Zoom out. Bitcoin is still over 30% below its October peak above $126,000, and sentiment remains cautious. The key plumbing story. US spot Bitcoin plus Ether ETFs saw a combined approximately $582 million net outflow in a single day earlier this week, largest since late November per reporting. And traders have been watching Japan closely because a BOJ hike can tighten global liquidity. One reason risk assets, including crypto, can feel heavy around these events. Story 5. Commodities. Gold up on the week, silver went nuts. Commodities were loud. Gold hovered around $4,328 per ounce and was still up about 0.6% on the week. Silver hit a record high around $66.88 and was up approximately 6% on the week. Massive relative strength. That combo usually screams, people still want hedges, even if stocks are trying to rally. Takeaways. What to watch next week? Does the inflation trend stay soft? CPI is easing, but data quirks matter. Markets will look for confirmation. Japan after the hike. Watch yen plus global yields. BOJ changes can ripple across tech, bonds, and crypto. UK households. BOE's cut helps borrowers, but the tight vote signals careful cuts, not a full pivot. Crypto flows. If ETF outflows slow, crypto can stabilize. If they accelerate, rallies can get sold fast. That's your week. Softer US inflation, a big BOJ hike, a BOE cut, ECB steady, and crypto still trading like a risk asset with ETF flows as the throttle. Thank you for watching. Please hit that like and subscribe for more weekly updates.